Hello my viewers and welcome again to yet another video. Today we'll be talking about market structure. Now what makes market structure? Number one is the market condition, which is the empire's battlefield assessment. Why is assessment easy? Take example, the military. The military, they don't go to war if they have not done their assessment, their entry plan, their exit plan or restrict. Their opponent, do they have the manpower? Can they maneuver them intellectually or with brute force? The military ensures they do assessment, not just to win, but for their survival and to know when to cut their loss. And that is what we do in Forex. So Forex is another battlefield. Starting all these modules, I remember telling you people, even in the introduction, that the forex market will always be here, but your capital may not. If you don't do assessment well, capital is gone. Take your capital as the soldiers and you are the general. If you don't govern well, you have nothing to show for it. What do we mean by market condition? The number one thing you need to take or try to identify first, if it is if sorry is if it's a trendy market, whether it's an uptrend or a downtrend. What do I mean by uptrend? Simple, whether it's a buying market, whether the market is buying, downtrend sell, whether the market is selling. To know this, especially for beginners, the easiest tool here is ADX. Now, in my book, I didn't write the meaning of in full, but ADX here means average directional index. If it's greater than 25, whether it's on a buy or on a sell, the signal or the trend is okay. Above 50 is perfect. Once it's above 50, don't get carried away to either be buying or be selling. Because let me use this adage for saying we are all used to or must have heard. What goes up must come down. Market is repetition. I'm going to show you why I said market is repetition. If no matter a market is moving in one direction, whether it's on the daily time frame, hourly time frame, it must reverse, either because of a support or a resistance or news. And I already told you how news affects in fundamental analysis. And it's easy to check on your TradingView ADX. It will show you, pop up and show you this. Another thing you need to know is clear swing point, higher highs or lows, lower highs or lows. Okay. This is the daily candle, it's a time frame. All these marks is me analyzing the market common sense. So this is the market. Now for the daily, what do I mean by the EM? Okay, another thing, let me connect. Check whether network will allow me now to connect. But another one you can also know is the EMA. What does EMA stand for? Exponential moving average. Okay, network is back. Let me close this one and show you how. You come to indicators, you type EMA. Now if you see moving average exponential is the same English. Whether it's MAEO, EML, it means exponential moving average. It's the same thing. So you press it. When you press it, you will see this small line. You cannot. So if you want to get the overall movement of the market, go to your settings. Okay, first I change it to black so that it will be easy to spot. Should I use this one? It's almost that same thing. Then input here, change it to 200. It will be good. So you are seeing it. For the daily, when you are seeing this, you already know it's an uptrend. And you can see the uptrend has been going up for days, weeks, and months. If we keep going, this vice versa, if you enter a market for this and you are seeing down a more of red candles than green candles, no it's a downtrend. So your job at that moment is looking and spotting out where there will be a pullback or a trend reversal. And you can see it here. And we explain what all this means, the trend line. We explain it in this video. The same thing with an ADX. ADX, this quickly, okay, no problem. You put it there, that is just it. These first indicators you are seeing here are the ones I either made or my partner made. Why this is good for beginner is, first of all, maps out all the other blocks, support and resistance area for all time frames. Okay, since it's there, I carry it here because here's the overall. Carry it here, and if you have all these basic indicators, you don't need anybody to tell you how to do your chart, map your chart, and how to take signals for yourself. So you can see, and you can see when it maps out, it respects it for all time frames. So let's quickly go back. Right now, you know what it's saying, engulfing candle and the rest. And to analyze the market, you will have to contact me or enter the link through my Telegram group where you can message me directly to have access to this or to ask your question, and I will gladly answer your questions for you. Or join me in one of my live sections so you know how to analyze the chart. So this is this. Now, what do we mean by swing? Let's use this. This is the lowest point now of this market. So here is the lower low. Here is the like let's just use the higher high. Coming down again here, call it the lower low. Why did I call it the lower low? Because it didn't come to this exact point started buying from. So here is a lower high. Coming here again, it's the same. Here will not be higher high, while here will be a higher low, like that. So when you are seeing it going up, down, then up again, breaking the former high, just know it's an uptrend. You don't, in fact, you don't even need anybody to tell you. So you understand. You don't need anybody to tell you how. So this is how you know an uptrend or a downtrend. So when you look at this kind of market, you know what to do, how to capitalize on it. Even this section alone, we explained everything. So let me leave it on the daily time frame. Thank God network is okay today. Leave it on the daily time frame. So let's go back to our slide. Let's go back to our slides. Alright. Another thing is the Fibonacci retracement. I have a book to explain that. I wrote a book explaining this in details and how to apply it with proper risk management. But okay, I will still talk about this will be the last thing I'll talk about. So now you know the number one trending market. We look at the condition whether the market is trending. If it's trending, fine. We also look whether the market is ranging. Now, let me tell you why this is important. Let's go back here. Ranging market, ranging. Oh, beautiful. And you can see the importance of this signal indicator I made. Helps you, in fact, there's no way to sugarcoat it. It saves you from false breakout. What is this? Break of structure, change of structure, break of structure. It has finally broken the initial resistance, which was this week here, and it kept buying for days, if not weeks, before it started reversing and continued to buy. This is what position traders or swing traders look for. See, it reaches the when did this finally break self? You can see it September 2nd September 2025. Now those that entered trade here has made nothing less than 20,000, about 20,000 pips profit. Times that by 0.01. The lowest size lot on a standard account, it would have given you $2,000. So that is that. Now a ranging market, ranging market, ranging market. Okay, this setup is a ranging market. This is a ranging market. Sorry, this is a ranging market. If you are using just the close, no, we said anatomy of a candle, where it opens and where it closes. But if you want to be like more accurate, you just take the full which system did for you up to here. Now this is a perfect example of a ranging market where it repeats hitting the support and the resistance. And imagine now for the daily when it hits here, now because let me make it yes, directly on that. It hits here because you are seeing it selling now, it entered. You will be knocked out on a serious loss. No, your account can be blown up. This is a ranging market. Like I always told you, wait for the ranging market to close well with a full body candle. If you have entered here because you are seeing a long wick and a very, very tiny, let me increase it. Because in market, this is what you look out for. Okay, it's not your phone. So exactly on top of here. Okay. So you saw it because of the weak EV buy, and you see what is happening. Where you reach a particular point, but reverse it. This is it. You can see how it's ranging. This is not a daily, so you can see we surprise is going down. You saw it broke the small order block here. It's selling or it's going to sell. You'll be knocked out. You will be knocked out. So this is a ranging market. On my life, I'll tell you how to capitalize on a ranging market, to enter it, how to even scalp when you see a ranging market, you see your small profits. Because we scalpers, when we see a ranging market, especially on the daily, we know where to enter and how to enter. But like I said, it will be on my live section or one-on-one mentorship. Because doing that alone, it take about an hour and some minutes, depending on how fast you are to learn. So this is a ranging market. So the best way is for to wait for it to break up. Sorry, to break out. And since it broke out here, since it broke out here and closed with a full body candle, where not small, it took about 50% of the body. That's what they used to break out. Your stop loss, swing traders will agree with this, will be here. This is where you would have put your stop loss. Your stop loss for this would have been here. This is the other candle. The candle used to break out. And that is 399 pips stop loss. If it's 1:1, you would have made it 1:2, 1:3. But you can see if you have held this trade, maybe when you broke out here, you set your break even somewhere here. This most swing traders I know, they don't even set break even. They will tell you market can come back to the entry and reverse. They don't even set break even. They are allowed to buy and do his thing. Imagine if he even allowed it to buy up to here. This is 5,397 pips. Let's just say 5,400 pips times 0.018. No, that is $540. It's not, and some people's salary for the year is not up to that. 0.1, $5,400. Size lot 1, that is $54,000. So on, so you do your calculation. So that is just it. The trendy market for beginners. Please and please let it do a breakout. But with this software, it tells you when it has broken out. And even though you see it even broke out, you would have put your SL here at this breakout. And you would have bought. Same with the sell. Same with the sell. So that is that on that. Where is okay, so let's go back here. And it's like I've already explained everything: support, resistance, buying, sell loss, and even told you how to capitalize on it. The shopping market, stay very far from this one. Don't even bother to do anything and to analyze anything, stay away. Let me show that this daily has a shopping market. Shopping market, it doesn't have it. Okay, a shopping market is something like this. A shopping market don't have it, doesn't have it. Shopping market, this doesn't have it. So a shopping market, anyway, shopping market is like a ranging market, but it's very volatile. Like you can see a bullish candle beside it, a bearish candle. Like the market is consolidating a lot of weeks, dojis. That is what a shopping market looks like. Okay, let's see whether there's any shopping market on the 15 minutes. Yeah, they are beautiful. This is a shopping market here. This is a shopping market here. Let me just draw what I want to draw first now. Because like I said, we are going to be talking about this. When we talk about it, but a shopping market is an example of a shopping market. It's like a ranging market, but very, very dicey and very unpredictable. So wait, I can say a live example because this chart is going now. The exact movement of gold. So if you want to steal, today is 16th April. This is UK time, 15 minutes past 3. I think Nigeria time is, yes, an hour. Okay, an hour and 5 minutes difference. This um, this is 20 minutes past 4 Nigeria time. My time stopped. So you can even see it, an hour and 5 minutes difference. You can see Piam, so like it's going to do on Pwa. Then you can see the engulfing candle out of nowhere, just started selling. So please, this is a perfect example of a shopping market. Still buy, sell, buy. Then the sell recover everything, looking like it wants to break reverse. See it. Unpredictable. There's no way you want to know whether it's buying. If you take sell, let's assume you took sell, by the time we sell, it was a 50-50 because this new order block came as a result of this sell engulfing sell. And you can see how choppy the market is. Try to buy back, sold, sold. You think it's going to sell because now finally broke this resistance. I mean, sorry, this support. Fiam, then retraced again, closing it still on a sell candle, but more than 50% of the initial sell it was on. Buy, I can see the engulfing candle. Bought back this candle, bought back this previous engulfing, almost even bought back this whole candle. So you can see how choppy the market is. There's no superhero stickler of the market. The best trade at times is when you don't even take trade, which is the truth. I'm telling you out of experience. That's why anybody that said I've blown your account, I tell them, did you learn from your mistake? Are you willing to learn? Okay, look at where you made your mistake. Learn from it. Control your emotion. Control your greed. Don't force. That is why consistency is important. My TikTok, I do talk about it where I post results. Lately, even last week, I told them this week is not all about, hey, Monday I won. Told them that week, last week, it's only 2 wins I had. Told them I'm okay. There's no need to force the market. Imagine now that I saw this thing buying and say, it's still an engulfing candle. Yeah. This market we buy, you bought it here. It has not reached your back to your entry. If you didn't set your break even as the entry of this trade, you would have hit your that which is practical, you would have hit your SL or blown your account depending on your capital and the size lot you were using or the lot size you were using. They are all the same thing. So all the other ones we can discuss more about that one-on-one mentorship. Another thing that drives shopping market is VIX. Please pay attention to this. This is Volatex. Leave Volatex. And volatility index. Sorry about that. Why is this important? Pro traders know when they see this, we stay out of the game. I can't say talk for everybody. Me, I stay out of the game. When I check it is below 10, 20, we don't. An example is BTC. When BTC dipped, let me show you people. When BTC dipped up to from it fell down to yes 60,000. Okay, let me just be sure about it. BTC, yeah. That was January period fell to 60,000. Give me just a 60,000. So you can see ranging market. That has me ranging. Bam, 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 bam. And the rest is yes. Uh-huh. Anyway, for time's sake, when it fell to these zones I marked here, I wasn't panicked because okay, this is no wonder. Let me go to the daily, we locate it faster. I was like, what's happening? We weren't when the team was sold, okay, if we came down to 50, this is a long time. This is where it is. When we fell down here, we all bought at these zones. We all bought at these zones. And I was told, though this was when I was telling people it was a ranging market, we bought at all these zones. See what I was even looking for. And this was February 26th. Without making predictions, that once you have a change of structure here, and I enter this rate. In fact, the whole of January, I kept taking sell, 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 sell. Even did a challenge of how to flip $10 to 40 something. A new student entered with $10, and I told him only that week alone, that week alone is going to make 500% of his capital, which he did. But even because of the break even, he just wanted to be on the safe side. Every day, if it doesn't make profit, 1,000 pips profit, 1,200 pips profit. And he ended up making over, between 50 to $70 profit with just $10. So this is it. We were not afraid because that was the VIX was less than 20. We weren't afraid. So when he first came here, this I entered the buy. I was using a big capital, profit account to be exact. Came to another position, bought again. All were with 0.05, 0.05. Came here, bought again. He bought back to here, which I closed all the trade. And I'm happy I did it. But if you have come back now, maybe panic my setting. Should I close this trade? This and that. And BTC has been really BTC now. What has been affecting BTC now lately? I would like to you all is news. Let's look at it. It has been ranging since. They have not been able to break this spot since when was this? February till now. And you do like a one to bar. Look at all this support zone, and you can see it. He played here and it reversed. Trying to respect this as he's selling his buying. So this is an example of a ranging market one more time. I've shown you how to where to stay clear from a choppy market. And this is a practical example of how you can capitalize on a VIX. Many people were selling, even investors. Investors took opportunity to buy more at this dip and made at least 100 to 200% profit or yield for whatever they put from here up to here. So that is just the how to capitalize on. Let me go back to gold because that daily setup is the best to yourself to explain the rest. I want to explain the rest. I think it should be yes. Yeah, back. Beautiful. So we're back here. So let's continue our class. Let's continue our class. So that is just it. Good. Beautiful. This is I've already told you time frame, daily, multi-time frame analysis, touchdown approach. Like I told you, clearer picture. But these are why this is showing like this is because I mark this at the time frame I normally use to analyze my market. This is where you press, show you all the time frames. Don't need seconds, no. Don't need seconds. Day. This is the week. You can see. Even in the week self ranged. This is the week time frame, the monthly time frame, daily time frame. Like now, for the daily, what are you seeing here? Market self is ranging only today self because he bought here, reversed, sold here, and the rest. And you can see how it's ranging. Hasn't been able to break this resistance and support. So you can see it. You can see the pattern. Right now it's ranging. You cannot say for sure. The only way you can say for sure is if trend line and there's a number of touch I normally wait for before entering. But all that will be explained more when we start working together. So this is just what you need to know. Trend breakout flag. I think that should be the next one. So 15 minutes, 30 minutes, you can see itself a clearer picture. So you're entering, you will know where to enter. Doji. So let's take the 4 clear and see the 5 minutes. It's as if they're playing tennis here. So when you see it, you already know when to enter or not. So you can see now the support and resistance zones. So when you are seeing it going up and down on the bigger time frame, you will know that okay, there's a little tussle on the lower time frame. There's a little torso on the lower time frame, and you can see that massive sell that you were seeing was even mainly on the 5 minute sell. Sell could not break here, ranged a little here, still even ranged up to here, finally broke it, started going back. So just stay away from this market for today. So that is it. So let's go to the next one. Price pattern and chart pattern. Enjoy it. So now you see the price pattern is composed. How do you do a price pattern? Just few candlestick bar. You know where the market, or you wait for the market to come, then know it will reverse. But if you want a chart pattern, you need, so let me show you the chart patterns out here. Yes. Okay. So it's moving, guys. Okay, guys, loading. So you can see the next 1 to 5, how to do it, how to enter. But even with price and pattern, the number of candle, we look for specific candle to mesh together. Even the mention of the candles is what gives birth to like an engulfing candle. Sorry, yes, type of an engulfing candle, which is like order block. So a practical example, go back to the daily. This is a practical example. Remember yesterday I told you, where is my network? Come on, load. Okay, okay. Remember this engulfing candle I told you about? If you see a doji mixed with an engulfing candle, it must respect this particular pattern. There are 3 other patterns. There are 3 other patterns. Okay, so why are you hiding here? There are 3 other patterns just like this, that no matter the time frame you are using, it must respect. Whether it pulls back up then later, it must respect. No matter whatever the news is talking about, it must respect. Highest the news impact is so strong, it will open again on itself before you think of breaking it. This is an order block. That's why I told you, and this is a type of this is another engulfing candle, combination of candle, but you can see it's not all the time you respect it. As I've already told you people in the previous 2 videos, if you want to know the rest combination, you need to start working together so that you can better yourself. But with this as a beginner, take note of this. At least you won't be handicapped. You won't be like somebody dependent. You need to hear, even though they tell you, whoever you're going to say, buy or sell. At least with this basic knowledge now impacting to you people, you can say, this thing is telling me to buy. The sun is not matching. It's coming down. Why am I going against the trend? We have been able to get that knowledge here, and many more once we start working together. So this, yes. So this is this, and let me show you something. That sometimes you see a pattern like this. Okay, this is one. I call this the flag pattern. You can see how, sorry, but that's okay. Let me show you the one I prepared down. This is an ascending channel. It goes up like this. So like this, I already know it's an uptrend. The only time this trend becomes invalid is when there's a breakout here. And the breakout, but it's not with a wick, but the full body candle. So let's go back to this. So in order to get an overall movement, you look out for chart patterns. Price patterns is on major moves, like what I just told you. That example you saw, you don't see that pair often. You can see how long it took that daily candle for it to get there. 2 months plus. You don't see that like that particular pair on the minutes. But we talk about those when we are working together. But each of these I'm summarizing. If you want to be master at each of these, you need to talk for at least 14 to 1 hour. Then, depending on how fast you learn, it will take you weeks to be perfect at it. Okay, ascending triangle. This is it. Ascending, we saw a triangle. So then we should see triangle through. Ascending channel, rising wedge, expanding triangle. You can see why it's expanding. Bull flag, like that I did for you there. That's kind of good. That some they will do it like this. Me, if I'm joining, I just draw mine to the ending. I like those things. So this is a blue flag, another pattern of blue flag. So when you hear trend breakout, this and that, this is the foundation. Here flag, same thing, double. Okay, this is another double. Like now, see this we use this. You can see this is a double top. Price came here, reverse came here, and he has been selling ever since. This is an example of a double bottom. This one you are seeing here is a double bottom. Here is a double bottom. But at the end of it, it reversed. Flag method. So you are seeing it. Double bottom top. These are the ones you see. It's easier to spot. Like now, if I draw another, okay, if I draw another, no, I don't need to. This, you have seen it. The ones I listed on my books are easy to spot anywhere, any day, anytime. The other ones I had to screen capture for you people. You don't just see them like that. Most of the time they form, you don't know that even forming because you have already used other parameters, you already done your analysis. So it's not even every time you know they are formed till you have a wider view of this. So that is that. Now the Fibonacci Mastery, the body ratio. going to just say a little about this. But like I said, it's a whole book. I have to sit down and teach you people this. Only this alone, I will explain it the way I understand, take a practical, and waiting for it to form on a live class and the rest can take hours. So all this I'm doing here is so that at least by using some terms and the rest, you have idea of what they are saying and how to do it yourself. Because I believe as you are watching this video, you are practicing to see what I'm saying, whether is you can spot it yourself or this. Please do reach out. Knowledge is the key. And when knowledge is powerful, having the right knowledge and implementing it. Most of all this software you see, signal software or automated software, is years of this analysis I poured inside of it and created it. Yes, I work with some partners. We all were professional traders, so it's a combination of talent and years of experience to perfect it, which is what I'm bringing out here. So please don't never be discouraged or never say I don't have $2,000 to start. You have $50, you can start. Though I will tell you the risks involved, but with proper risk management, you must see profit. You must see more wins than losses. I can never guarantee you 100% win because I'm not the owner of the market. I am not the owner of the market, so I can never guarantee you 100% win. Even most of your best traders, you must see loss. You must see minus that are this particular trade you enter, it was a loss. But you must see more of blues, like which is wins, because it took us years to practice and perfect. So what does this mean? 23 shallow, 50. Okay, let me just show you people practical. Let me show you people the free one here you can use to explain it. Okay. Yes, yes. This comes like this because I already told you it's bearish. What this day candle is just buying and selling because it's ranging. And apart from ranging, still have shopping market. You still even doing shopping movements rather inside the ranging market. That's why this buy he bought, he closed, sell took the whole buy, started selling, now he's trying to buy back. So please, careful. Now this is just the calculation. If you reach here, like when you retrace now, this is another the code. See, when it retrace and you saw an order block, you wonder about this combination of all these things helps you. Okay, look at what I told you now. It does. You reversed here. Now the rule is when you reverse, allow it to retrace. Retracing it and it breaking that zone shows that okay, we are in now for what itself. But now you see it did not close, it took that to enter the next candle to do. But what did I tell you here? Shallow pullback, which is aggressive and has a lower probability. 38 is even medium. 50, okay, high probability of a reaction zone. This one is the best. This is the best. You can see brought back, did a fake breaker. If you have entered here, it will hit your stop loss. Because you can see the opening of the next candle. It didn't open immediately here. showed you price jumped at least, okay, let me be sure. I know it's over 20 pips. No, what is 20 pips? Over 200 pips. Okay. Price closed 43.75 and price opened. Yes, okay, let's just say 43.85, over 100 pips. So if you have entered it down before the market closed, expecting it to continue selling, like you want to be a wise man, you would have cried here, which is just the truth. You can see it bought doji candle, the reversal at present when it's a red doji candle. Beginners or one of the traders will tell you, red doji candle, it will sell, enter sell. That's what I told you. Price action does not guarantee you 80% win. You can see a practical example. And this place, if you are wise, you will see what is happening here and still capitalize it, and you will know why this option is continuing. Now the 38% rule, if he has gone here, which he did, came down, let me expand it so that you see it. He came down here, back here. If he has broken here with a full body, then it was going to sell. Retracement showed you is still going to buy. That is what you are seeing here. So now if this market closes by the end of the day or the next day, here just know it's going to sell. But the best one is for it to reach here, and you can see the may reach here before next week Friday. And if it starts reversing here, you won't be surprised because already this my software already told you expect a reversal from here between 50-80 zone to 52-30 zone. You will see market reversing. Don't be surprised. I said they helped you to do the analysis, and you are seeing this 100%. Okay, let me give you people this one for free. Let me move this. Give you people this one for free. 100% because for the daily time frame, he hasn't hit this zone. You can see it consolidated, did a choppy buy sell choppy move, which now jumped to a very strong support. And you can see the time, how many times he bought, tried to break here, the fair value gap, FEG, and the rest. You can see it hasn't. So if it comes here, this will be a double top like this one, and it must reverse. At least even though he wants to buy back, he must reverse for the daily time. He must give you a complete sell for one daily candle. Maybe news or anything, save even or investment can skyrocket back to 6,000. But he must give you a pullback within this one. He may get here and start repeating what he did here on the 4th of March. 4th, 5th, 6th, which was 1, 2, 3, 4, 5, 6, 7 before he finally broke here. Then the 8th day, he has been selling till he started buying back. So let's see whether it's able to break here. Like I tell you, Just like to do my own trade. What am I doing it? Here is flat. It's going out, going down. Now touch one, touch two for the daily. If it comes here, close it, I might wait for it to come here. So if it breaks this zone, it's going to buy up to here, and nothing might hinder it again. Not even this zone. Let me do a small pullback. Buy. But you see this big zone. This is over 2,000 pips of order block of fat with the resistance zone. So when you see market moving with these softwares for a beginner, you won't be surprised. Say, okay, let me be safe. So this is just it. So if this move now, I can do another ranging or consolidating like this one. Violent Choppy. I didn't know it's doing a Choppy movement because I've shown you on the minutes, 5 minutes and 15 minutes. I was only showing you on the 1 minute. But you just be like you're seeing a heartbeat. So if it breaks here, it's buying. If it breaks here, it's going to sell again, maybe to this place. So that is just it. In summary, if you reach here like now, here, because now you know how to analyze the market, you wait for it to break this zone. But talking more about risk management with this, we are enabled now. We have to start talking about more parameters you can use to do this. You can only get this if you working with me or you reach out to me. So I guess that is all for this video. That's all for this video. Thank you for watching. I'll see you on my next video. Please remember to, sorry about that. Please remember to click the link on Telegram, enter my community, and reach out to me in my community. You see the admins there, chat the admins. You see my name there, shout me up. I'll reply you immediately. Or you write me through mail. So it's either any of them. Reach out to me or just drop a comment here. I will reply you. Thanks. Stay tuned for another video.